Hey guys, hope you had a great week, and hope you've got a great weekend planned ahead in this Memorial Day weekend. And of course, Monday, Memorial Day, we just want to pause for a moment and we want to thank all of those, especially those that have made the ultimate sacrifice for our military, those that continue to make the sacrifice, the families left behind, those that are serving. You know, we're grateful for you and we're thinking about you, and we're definitely remembering those that made the ultimate sacrifice this Memorial Day. So we're grateful for you. For the markets in this past week, in a word, ugly. It's been really ugly. Every single day we've seen rates go up. It's been a steady drip, and that's even scarier. Sometimes I'd rather see a lot more volatility in terms of, swings, because, we can get swings on the other side. But the problem is we're seeing ourselves test resistance levels, both on the 10-year Treasury and in the mortgage-backed securities. Mortgage-backed securities, by the way, are severely overbought. And so we're really hoping that if we could just get a glimmer of hope in the headlines, or we can start focusing back on the fundamentals, because the reality is we feel really strong that what's winning the day right now are things in the headlines that really have little to do with mortgage-backed securities and the Treasury and everything else. But there's enough noise there in the Treasury market, and certainly to do with the Federal Reserve. They're talking, and some are agreeing and some are disagreeing. They should even raise rates, continue to raise rates. Some are saying we should stay flat. There was even someone, I think a week or two ago, that said something about maybe they should start, bringing them back down. So obviously they're not on the same page. That's not helping. And then we've got the debt ceiling issue. The government can't seem to come to an agreement, and that's unsettling to the market, to say the least. The stock market has been down a little bit this week. It's up today as I talked to you this Friday, but there's just a lot of uncertainty, a lot of noise out there that continues to win the day. And when I say that to say, listen, the fundamentals are still there. Now, the PCE report came out earlier today, and it did show month over month, oil prices are still up. Auto prices, specifically used car prices, have gone up month over month. But we're hoping that even with this Memorial Day weekend ahead, that some car dealers will start dropping some of those prices, and we're going to start seeing some of those numbers come down, and perhaps next month the PCE report might actually, the core rate went from 4.3 to 4.8, I believe. So if you're keeping tabs at home, we really feel like that'll go back down to 4.3. Now, what does all that mean in interest rates? Well, the reality is just every time we get news, it just doesn't seem to be good for the mortgage-backed securities. So that's why interest rates, again, every single day have gone up from Monday to Tuesday to Wednesday, Thursday, today. Now, they went up today, and then they've kind of settled back down. So if anything, the silver lining is there was a little bit of volatility today. We were up a little bit this morning, and then we went up in interest rates quite significantly throughout the day, and then they seem to be settling back down, and they're talking about more mortgage-backed securities. So watch the 10-year Treasury over the weekend. Let's see how that behaves beginning of next week. If we can start seeing a pattern to where we can start, resisting some of these technical aspects in the charts. We've had a bad week this week. Maybe next week is a little bit of reprieve and we get better results. And next week, the jobs report comes out on Friday, and we're really hopeful that there'll be some favorable news for the bonds. And so watching that very closely, and hopefully we'll have that as part of the update next week. And hopefully I come to you with better interest rates next week, and we're going to start seeing a trend the rest of the summer. I can tell you the fundamentals are there in terms of the core CPI and the core inflation numbers overall year over year. If you're looking at it from a week to week or month to month, like the report that we saw this morning, it can get a little scary. But if you look year to year and give it some perspective on where we were and where we're going, I think the market's going to respond to that pretty favorably. But again, it's going to take some time, and we have to have some patience, and certainly going to be some volatility between now and then. So certainly, in the next 4 to 6 to 8 weeks, we expect, hopefully, the debt ceiling will get resolved. Hopefully, fundamentals will come into the focus, and when that happens, better days are ahead on the interest rates. So let's talk to our clients, let's talk to our buyers, even sellers that are a little bit on the fence about some of these numbers, and talk through that. We can talk about temporary buy downs. We can work out whatever we got to get to help in the interim, but in the long run, things are going to get better. You guys have a great weekend. Call us if you need us. We're here all weekend. Y'all have a good one.